Let's go ahead and get started. So welcome everybody to another Deepvue webinar. Today we'll be focused on finding market leaders. We'll kind of cover the concept of a market leader to begin with, run through some examples, and then transition over to Deepvue and talk through the systems and screens in Deepvue that you can use to find them a lot more easily. So with that, welcome everybody once again. Hopefully you guys enjoy this, and let's dive right in. So Rai, let's run through the next slide and I'll hand it over to you.
Perfect. So today's agenda is going to be, what you guys are here for. We don't want to completely make this all about Deepvue, but we'll cover the concept first. We will talk about what a market leader is, how some of the people that have inspired us to trade and invest in the markets, how they define them, and give you guys a little bit of, just scope on what we feel you could scan for and what you could look for in the market so that you could be catching, maybe if you catch 1 out of 8 at the end of the day, it's more than enough, really. So in the second half of the presentation, we'll get into how we've incorporated it into some of the preset screens that we have in Deepvue. We'll create a few screens on the fly, talk about a few data points that are available, and then open it up for Q&A. The questions that you guys have should not be limited to just Deepvue. If you have questions in general on what we're talking about today, feel free to ask those. This is not just about, a platform and how we've incorporated these whatsoever. So let's start with just, some of the basic definitions of what, you could define or how you could define a market leader. And many different ways, right? So for an investor or a trader, what we're looking for here is more so the growth side on how potential, stocks can change the way we work, live, and play. How they could be disruptors in their space where they're consuming market space. Think of an Apple versus a BlackBerry type of situation, and the whole iOS versus Android type of thing. A Google search versus a Bing search situation. So all of those, like, are they disruptors? Do they have new CEOs? Is there something new that they're doing that nobody else is doing? Something like, they're growing at a fast pace. You hear about them, you use that product, you feel, that product is really good, you interact with it, and you want to go back to it. Very similar to how Google came about to be. And we all use Google and we kind of take it for granted today. Or Uber, right? Recently, you could say something like an Uber, everybody's, it becomes a verb of sorts over a span of years and decades. So there are many different, quantitative factors, but there are also ones that, we live our lives and we go, like something like a Celsius drink, right? If you've heard of it, you've seen people talk about it, etc. All of that kind of plays into what a market leader could be at the end of the day. So Richard, want to hand it over to you on what you want to add there on what a market leader is.
Yeah, sure. So first I'll say often they're a little bit more kind of, liquid during the run. They might not start out liquid. And if you look back at a lot of William O'Neill's winners, actually at the very beginning, they were pretty illiquid. It was a little bit different time back then, but recently more of the leaders have been even more liquid. And Ross says this all the time. He's always focused on the strongest institutional quality leaders, and those often have pretty high dollar volume, which we'll get to when we talk about how to screen for these. In addition, I'll add that, the true market leaders are always kind of at the forefront of the leading themes and innovations of the day. We just did the class with John Boyk, went back and studied 120 years of market cycles and leaders and legendary traders. And the stocks that these traders were trading and the biggest winners during every period in history, they're always part of whatever is the cutting edge technology, cutting edge theme that's changing how we live our lives. So, back in history, it was rockets, it was the railroads initially, right? It was cars, then we get to the internet age and how that impacted things. So all these companies that can grow incredibly fast and have some of these major moves, they're always part of an entire wave, an entire industry group that's acting well and is kind of riding the tailwinds. So we've got a slide later on that refocuses on that, but I think it's really, really important to always be thinking about what is the theme that this stock is riding? Are there other stocks in the group acting well? And is this a theme that could go on and continue to grow total addressable market and grow natively for the next few years? I think that's always important to remember.
Yeah, and there and there's always going to be one-offs, right? Something like Amgen back in the day in 1990, if you guys study the first 100 charts in William O'Neill's book, they came out with a cancer chemotherapy drug that fueled that type of, price action. So we're always going to have one of those one-off type of movements in the market where it's banking on the company, right? Only, and it's not a theme. So we shouldn't completely ignore that part. But what we can operate on is if it's, be it cannabis or be it AI, be it semis, software, etc. Those type of themes have multiple leaders in a way and different, maybe cloud computing or cybersecurity, right? Different segments of that bigger umbrella that can kind of lead that market. So it's kind of, a bit of both, and you'll have these one-offs that kind of, go out and they completely change the game with respect to especially the pharma space or the biotechnology space once in a while that fuels that movement as well. So that's how we define it. These are very general criteria. Obviously, we as techno fundamental traders, right? We want to combine the technical aspect of it and then the fundamental aspect by looking at earnings, sales estimates, etc. And then, just to increase our probabilities over a span of weeks, months, and years of holding something that has multiple earning gap ups and multiple cycles of growth, right?
Or trading around them, right? Because some
Yeah,
people with these true market leaders, they're trying to, catch the whole run, while some people, more of a Mark Minervini, he says this all the time with the Yahoo run in the 90s. He had multiple swings in that where it advanced, 50, 80, 100%, and he compounded that way. So true market leaders, it's really style agnostic. Whether you're even a day trader, swing trader, or, longer term investor, you can capitalize on these and get the best bang for your buck, and have kind of a smoother ride by focusing in name like this. And like you mentioned, I didn't mean to jump you off, cut you off. I know you had a little bit more there, but the characteristics we'll be talking about today, it doesn't have to meet every single one to be considered a true market leader. These are just kind of all things that you should consider and think about, and different ways of approaching how can I find a market leader. You could have a screen that looks only for the fundamental side. You could have a screen that looks for more of the technical side, and both can arrive at the same names. And if they do, that kind of adds to the probability that the stock could have good potential. So, Ryan, I don't know if you had any more on this slide, or we can move on to the next one.
one more thing, I'm just looking at, how to make money in stocks, page 83. It says IPOs are young, innovative names that help drive every new market cycle and increase our standard of living, right? So IPOs kind of play a huge part in, we had roadblocks at one point up, 120, 130% in that run from the IPO. So those type of names also, they are a little bit fast, but some of those companies that we'll cover later, Square, the gap up on February 22 in 2017, how that came about to be and how we could kind of scan for those characteristics as well, will help us. So I think we've talked about that slide enough. Richard, if you want to read this out. And
Yeah, sure. So obviously, this is William O'Neill. A lot of incredible foundational work in developing the blueprint that we can follow to find true market leaders. So we all owe him a tremendous debt. And his definition for the true market leader is the number one market leader is not the largest company or the one with the most recognized brand name. It's the one with the best quarterly and annual earnings growth, return on equity, profit margins, sales growth, and price action. So again, he was very much a techno fundamentalist, a lot on the fundamental side as well. Ross will tell you a lot of it, he dove deep into the companies that he was focused on, and he had to, right? Because he was so concentrated. But that's his definition. And again, that's another way to think about it. And it kind of encapsulates a lot of the characteristics that we already talked about. So, Ryan, anything to add here, or?
No, I think William O'Neill highlights some of the characteristics that we see here. Quarterly and annual growth, the return on equity, sales growth, etc. So all of those play a big part of his analysis. He kind of took companies that moved up, kind of worked his way back to building his methodology, and these were the factors that he found were one of the ones that were consistently occurring through price leaders in the market. So his whole methodology is built on the studies that he did, and he was obviously influenced by other traders as well, and then he found a set of characteristics. Some of these tend to change, right, as the market changes, but the gist of it is he found these still tend to work from market cycle to market cycle. And the last one he says, and price action, right? That's the key one from a technical perspective. A stock can have all of those and not have the price action, then you can't really make money on it if it's not going up. So,
Yeah. And before we move on, I see some really great questions coming in the chat. Keep them coming. We'll address them as we go. But there's one I want to mention here. I'm not sure if it's really giving your name, but NA, are we talking a bull market only approach here, or do the market leaders in bear markets or do we get market leaders in bear markets as well? I would say the vast majority of market leaders make their major moves during strong market trends. But that base and run often gets set up during bear markets and corrections. We'll see that over and over in these charts. But during bear markets, it's very tough to have a true market leader move just because you're fighting all the forces that are holding stocks down. But once that pressure gets lifted, that can really birth a lot of amazing moves. And many of these market leaders come in cycles where we've had a bear market extended, or we get a quick correction, sets up a new base. The base is nice and long because of that bear market, choppy period. During that period, you're seeing accumulation signs, you're seeing earnings improve, sales improve, and then maybe there's some catalyst. The overall market lifts. Some market leaders take off before the market, comes out of the correction. But the vast majority of market leaders make their moves during bull markets. Just to be clear. All right. Anything to add there, or you think we move on?
No, so market leaders in a bear market. So that could be phrased one or two ways. Maybe NA is talking about, are we shorting stocks that, will lead us to the downside? The thing is, what majority of traders tend to do if NVIDIA is leading the market and it becomes the poster child of this run, sure as heck, it's going to also become the poster child of that bear run. We have our most recent examples that we have right now are PayPal, Square, Roku, anything that doubled or tripled, right, during the past, 2020 to 2022, they're all down, multiple points. Carvana, just pull that up. That thing went up 450% and went from $400 to $4, right? So sometimes, most of the times if we get really ugly bear markets, your market leaders on the top side are usually your leaders on the downside, because there's an acceleration of selling those stocks. Institutions are getting out. There's a lot of, market environment can play a big role. The Fed can play a big role, etc. So it's kind of a two-way street. So that's why we say and price action. That's why William O'Neill says and price action. If you're bullish, do you want the price action to be positive? Let's just say above key moving averages. You could define that as, from your personal system as a 200 simple moving average, or a 50 or a 65, right? There are a multitude of ways. And then the same thing to the downside. They will continuously run into technical resistance on rallies. The price action won't be good. And the earnings and the sales growth, etc., will kind of follow after the fact. That's why we use technicals to kind of get out, and we use fundamentals to see if the company is forecasted to make a whole bunch of money over the next 18 to 24 months. So I think we could keep going.
Mm-hmm.
First one we have here is Apple, from coming out of that 2008 bear market, right? We had that huge, related to the financial markets, So basically, we got that 2008 bear market. We come up the right side, and then we have a run. This is obviously post-split prices. We run from about $3, which I'm sure Apple wasn't trading at $3, at that point to $24. So, Richard, if you want to just cover the basics of what we see, how from a price action perspective, we are on a weekly chart as well. So, if you want to talk through that.
Yeah, sure. So obviously we had the bear market, which where we were just talking about that a lot of these moves start with that type of correction. We see Apple in a textbook stage 4 decline below the moving averages. We start to see the stage 1 happen right here. We develop a clear line of resistance here, get that stage 2 breakout, and we begin to see it trend beautifully above the 10-week moving average, which is here in red. Make some, several advances. We get bases along the way where we consolidate, ultimately break out to the upside. We get another base here. We've got some false breakouts, which are pretty common during this type of move. And then we just continue to kind of stair step higher. William O'Neill, he's got his base counting methodology where he's focused on the first 1 or 2 bases after a trend is really established. This base right here might be a little bit early for him. He might call the first base maybe this stubby one or this one here, but he's focused on those first one or 2 bases. Later on, we get lower probabilities, even though this does continue to work. You can see it gets very choppy back in here. But if you're a swing trader, you can kind of operate base to base and try to get these power moves in between. And we do ultimately continue to push higher and get a nice trend at the end. And this one continues to stair step higher. Obviously, it's Apple. It's one of the strongest stocks out there. But in order for a stock to do that, it needs to continually reinvent itself. And think about how many different ways Apple has done that with the iPhone, the MacBooks, the App Store, iPad. Yeah, that's why it can continue to have these massive moves, is because it continues to develop new and innovative products that lead to increases in sales and earnings. And we see that with a few of the biggest market leaders, but not every single one can do that. And when they can't, and the market cycle ends, they can drop very hard. So anything to add on the Apple chart? I think it's pretty clear cut. Really nice weekly chart. That's awesome to study.
Yeah, and a lot of this you have to understand in terms of how price action moves. We don't need to know and do these, you can't know everything that's possible from, let's say, a fundamental perspective, or how institutions are anticipating the movement, how they're projecting the movement of that company. That's why we use the technical part to kind of tell us, right? And then we use some metrics on top of that. The other thing is this run is fueled by a story that was continuously changing, that was continuously disrupting. And that kind of analysis comes down to kind of, how you track that industry group, what you know about that industry group and all of that stuff. But you could also track it through price, earnings, and sales, and keep it very simple as well, right? So there are 2 ways. You don't have to be a Peter Lynch to make money in the markets, right? You can have a technical plus fundamental approach to it and kind of mix those metrics up to do, a reasonable amount of homework, but not to a point where, you're looking at credit card data and all of that stuff that people also tend to look at and profit a lot as well. So this run, I mean, the gist of it is when the red line is pointing up, right? That's when, the 10-week line caught up to price action in early 2009. We reclaim that, and the 10-week line starts pointing up. That tells you on a 10-week basis, the stock is now in an uptrend. And then eventually what we see is the 40-week line also pointing up. That's a black line that you see on the charts. When that starts pointing up, that means on a 40-week basis, Apple has now been rising. And that's a company, and most, if you were to keep it basic, the 10 and the 40, those companies, if they trade above that for an extended period of time, they're kind of de facto market leaders in their own space, and they're doing something that's different than the entire competition. So
Yeah, and I looked up kind of the fundamental catalysts during this move, and it was the iPhone sales and the iPad sales that were driving this, and also the App Store. Back in 2010, there were 3 billion apps downloaded. The iPad announcement was in January of 2010. So it's those type of catalysts that you should be keeping an eye out. What new and innovative products are coming out from promising companies that continue to drive those earnings and sales?
And recently, we have an example in Intel versus AMD. type of situation, right? AMD used to be considered kind of the secondary in the space in terms of what they developed in terms of processors, right? Intel was the top dog. They were at the top of the top, right? Now that's kind of changed. Even you'll see, in mentions of news, etc., those kind of flip, right? Those things, people mention AMD first and Intel second. So a lot of this is driven by innovation as well, and innovation shows up in price action. Okay, so innovation always shows up in price action because when price moves up for a significant period of time, there's a lack of sellers, and we get a proper base. Technically, what that's telling you is the people that manage a whole bunch of money, could be a billion, 2 billion, etc., they view this as the bigger story from a fundamental perspective, and they want to continue to accumulate that stock from a price action that shows, from the price movement that shows, and the earnings estimates it shows, and the sales estimate it also shows, which we'll get into as well. So let's move on to the next one, Richard, if that's
Yep,
fine.
sounds good. So this one is Square, and I know you were trading this around here. So I'll let you start. What were you watching during this time, and yeah, walk us through the price and volume characteristics.
So I basically Square, a lot of these IPOs they're listed in the markets. I just, this one was one that I knew a little bit of, a story on, obviously the digital payments, etc. But this initial, you'll get your IPO based type of action, and it won't really go anywhere. It's very volatile. Folks are kind of, researching, knowing about the name, and certain institutions pick up on the story, do their homework. Some IPOs can build an IPO base and just go right up, up to the right side here. Some of them won't do that, right? It caught my eye just right around here in 2016, July to October area, when it tightened up quite a bit. And we'll go over how you can kind of visualize that tightness as soon as we're done this small presentation in Deepvue as well. So it caught my eye over here, but the biggest tell was kind of this week where it broke out of this 5 or 6 week tight formation. It broke out, and this was the highest on that particular day. It was the highest volume ever that Square traded. That's something you can also scan for in the markets, the highest volume ever, right, on a particular day. And this thing never looked back. If you even zoom out a little bit more, you'll see that this went to $200, $250 from there. So this was kind of my tell on this name. I started tracking it over here. And the idea is, when you see these characteristics, that's what William O'Neill did. That's what, Mark Minervini does. That's what, David Ryan, who's influenced by Ross Haber, who's a portfolio manager. They all kind of do the same thing. So that's what we could track. That's what we could look at in the markets, and that's what we could scan for from a technical perspective, and then work our way back to see how we can, put a net on those market leaders, right? And see if we can just catch 1 out of 10, 1 out of 8, 1 out of 6 is pretty good. And if you do that, you will have, a lot of progress in your account over the span of multiple market cycles. So this one, again, very simple. The 10-week starts rising, tight action breaks out with the highest volume ever, right? A rising 10-week and a rising 40-week on the weekly chart that we're looking at. That's a definition of a stock that's not being sold into, even if there's pressure on the markets for multiple weeks and months and quarters. So Richard, anything that you want to add?
Yeah, we've got kind of a weekly launching pad set up here where, like you said, the 10-week is coiled with price. We've got the 40-week moving average, which just shows up here. That's the black line. Price compresses against that. During the base, I saw a question about, what does a constructive weekly base look like? We see tight price action. We see overall lower volume than during the prior uptrend. And ideally, we see bigger weeks of volume on up weeks than down weeks. And basically, there's like no volume during the space. All of it is below average. And then finally, when we get this breakout move, we see a pickup in volume that continues during this uptrend. Then we form another base volume again. There's really no bad weeks here. We do get one red week, but look at the close there. It's a constructive close. And then of course we've got the gap up on large volume. And you can see that kind of constructive action during each of these weeks. Even as Square gets more liquid, average volume increases. That's another key characteristic, Rai, you've taught me to look for. So that's kind of what we're seeing here. And I don't have too much else to add. Again, it kind of gets wider and looser the further you get during the run. But there's always, depending on your time frame, swing traders can make plenty of money even later on in the run once this uptrend has really been established. So, but this base here, I mean, it gets really tight against that moving average, moves higher, and then looks like a 3 weeks tight right here where all the closes are right next to each other. I know on a daily chart that would look extremely tight. We get a little bit of shakeout, and then look at this powerful, almost climactic move that we see. And then I know there's a really bad bar here that Rai was telling me about to end this move and start a longer base. But yeah, that's all I'll add about this one. But again, the IPO pattern where it's a promising young stock, earnings improving, maybe it's just turning profitable, in this primary base. When that sets up, you should be keeping an eye on it. And I know, we've been watching IoT because it kind of fits that type of template.
Yeah, IoT is kind of, if I could point to it, it's right about here, ideally, right? Like that's what we can anticipate at this point. It's seen the highest volume ever. It's seen that. It's now on the weekly starting to tighten up right around that 30 area. Square was right around that 15 area. So if this market just holds itself, there's a really good chance that, we'll see some run. From that stock as well as it starts the kind of, the 10-week catches up. We talked about that or actually earlier today in our spaces. We want the 10-week to catch up. Once it starts respecting that 10-week, it acts as almost insulation, right? This is almost, you're going from 16 all the way to 47 and you're insulated by this 10-week line all the way. So that's what we want to see in some of these. And we're talking technically right now, obviously. And, Samsara has a whole, slew of services, etc. That, I'm not really well versed on, but I'm kind of seeing that as a very similar stock. It's a little bit lower because it's right around this all-time high. So it's kind of right here, except we've seen that highest volume ever on that name. So that will be interesting to watch and maybe look back on in a couple of months or a couple of quarters from now.
Yep. So moving on to the next one here, we've got Netflix, and Netflix is a really cool stock to study because it's reinvented itself so many times, right? Initially, you were ordering DVDs by mail. That was kind of innovative. It replaced Blockbuster. Then it turned to streaming, which I think this run is kind of when it was emphasizing that, or maybe that was the next one. But it's reinvented it so many times. The kind of most recent innovation is kind of original content, developing its own star shows. And that's the type of innovation, again, that we're looking for, that end factor. But this is the move in 2009. So during the same period that Apple made its move, we've got a similar nice line of resistance here. It breaks out of that, forms another base, breaks out, doesn't go too far. This looks like an earnings gap to me. And then from there, it really kind of accelerated to the upside and had a super strong run with a few bases along the way. But nothing too much here to say. But again, this is actually a good example of leaders that break down, because this broke down hard. I think it dropped 70% after this move. But if you know stage analysis, you can protect yourself once that stage 4 begins. And you can see here it respected that 10-week moving average. Then it broke below. It couldn't get back above. That moving average starts turning down. That's kind of warning signs mounting up that you should be focused on if you're in a leader like this, because it's not all gravy. Netflix won't go to the moon, in a straight line. It's going to have bases and bad corrections along the way, and you want to protect yourself when that does come. Any thoughts on this one on Netflix, Roy?
No, I think it's another one that, like you said, reinvented itself. One thing I do see is another characteristic is a lot of interest or how it traded from 2010 to 2011 in terms of volume that it traded is very different than the volume that it saw from 2009 to 2010. So when a name tends to do that, that's another sign that there's a lot of interest in the markets, and primarily the market volume, until obviously these recent names like GME and AMC type of stuff, right? GameStop and AMC, those were very retail driven. But back in, 2009, 10, 11, you didn't have a lot of these social platforms going crazy with millions of users. So that is driven by a lot of interest and the volume, the volume that trades in the market, maybe not true today, but back then was likely, 60, 70% institutions, 30% retail. But it just tells you, an increase in general average volume, it's in the eyes of the market, and it's not always a bad thing when some of these stocks are in the eyes of the market because they must be doing something right. So
Yeah,
let's
and
keep going.
yeah,
Oh,
there was one question from Mike. When do we consider a base to be completed? For me, it's when it breaks out and holds and is able to move higher. You never know in the moment if a breakout's going to hold. All you can do is play the probabilities. And personally, I always look for kind of earlier entries, below the base pivot, tight areas, stuff like that, where I can enter a little bit earlier and ideally have a cushion going into that base breakout. Because as Rai, you kind of say all the time, at that level, it's in the eyes of the market, and there's often a lot of volatility at that level. I mean, here, we get more of a clean breakout, but the next one looks like an earnings gap. We kind of consolidate for a few weeks and then go. Here we get, a lot of volatility. It pulls back to the 50 week even, or sorry, the 10 week and the 50-day here. And then we finally, re-break out. And Ross says this all the time. He's seen a lot more of this where we get a breakout, a failure or a pause or whatever, and then a re-breakout. And that's kind of what he waits for nowadays. But even from here, it goes from 19 to 40. So, you always just kind of got to keep an open mind, manage your risk tightly, and be willing to try a stock multiple times on those breakout attempts.
also, when on the weeklies, obviously the gaps don't show.
Yeah.
So that bar that is at the top of that base right here is likely a gap up. So it likely closed one day, and then there was some sort of market surprise on that earnings. Market expected something else. Market expected it to be somewhere over here after earnings. It didn't do that. There was a surprise. It likely gapped up. But what's key is that next 2 weeks it tightened up, and it gives you enough of a time span to make sure you can manage your risk in that tight corner right here before it goes, right? So weeklies tend to mask the gap ups in many of these names. So you want to also be careful. It's not as easy as just drawing these lines and things are going to be great. You want to go on the daily and also study that gap up and see how that happens. So,
Yep. All right. Let's keep going here. So we've got Tesla, and we do show kind of the earnings growth that kind of led to this move. I guess I'll start. This also was an earnings gap, and they had a surprise profit here. This is October 2019. We've got if you hover in Deepvue over a quarter, you can see this type of report, the reported number, the estimate that it was, the percentage surprise, as well as the dollar surprise. So here we had a surprise profit of 12 cents when it was supposed to lose 8 cents. That's a type of thing that can lead to a really strong gap up. When we saw that in 2019, it tightened up a lot, led to a massive move into the end of 2019. We, of course, got the COVID correction. Earnings, sales continued to accelerate, and that led to this being one of the best stocks in that 2020 move. And again, looking at the theme, EV, game changer, a lot of other stocks, NEO, were working really well, and this was kind of the leader of the entire market and of that group at the time. So it had everything. It had the price action strength, it had earnings growth, sales growth, the theme, the group, all those factors kind of played a part.
yeah, this one's also starting to shape up once more on its daily chart as well.
Forming a
And
range.
yeah,
Yeah.
the run here was incredible. They were earning surprises, increasing sales, and price tight price action to go with it. So especially when you get tight price action with lower volume, right? When price is pulling back and there's no volume, that just is a clear as day sign that there's a lack of people or there's a lack of intent to sell this stock back into this prior range, right? And when that happens, naturally what happens is we run out of sellers, we get a whole bunch of buyers, and we get 8 weeks or more in a row here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 weeks in a row to the upside because we're on a weekly, right? and then we hit, kind of the market wall. Nothing kind of beats the market at the end of the day. You will learn that. If you haven't learned that, you will learn that. All of us do at some point. It doesn't matter, in terms of how the market, how much a company can earn when the market kind of slips, things pull back, and that's just the mechanics of how things work. So this one kind of, pulls back. We get that correction V shape out of that. It gives you an entry right here again, right at the top of this giant base that it's built, consolidates, breaks out, and then is insulated by the 10-week line to the upside. So this one, another good one. This one has run multiple times in recent times, and also a little bit back to the left as well. But it's starting to shape up again on the daily. So let's go to ELF. So this one's a recent one. This company is in the beauty cosmetics space, and it set up kind of, the 2022 market, and now it's acting completely different, in the 2023 market that we see. So a lot of, this base building that was done and this consolidation up the right side, and you can see how the 10-week line is just insulating price all the way from 34 to 137. This has been one of the best stocks in terms of how it looks. And if William O'Neill was to write his book again, or they were to make a new version of it, this would be one of those where it supports a 10-week line all the way up, and it's really beautiful, right? In terms of its trend. One thing that we do see is obviously increasing EPS and steady sales.
And accelerating.
Accelerating as well. So this blue line underneath it says that the last 3 quarters have been accelerating. And also this blue line underneath the sales tells you they have also been accelerating. So, and the estimates are looking pretty good. So this right here. So when you see tightness, you've come out of this base, you've broken out, and now you see tightness. This somewhere over here, there was an earnings gap up as well. So there was some sort of surprise, a change in story, something that they did that was, that institutional, from an institutional perspective, they liked. And we see a whole bunch of blue bars, right? All these up weeks, giant blue bars that shape up. Stocks go, the stock goes sideways. The market starts to improve a little. That's all it needed. Even in a bad market, you could say this thing performed quite well. It was just, and we'll get into, relative strength, new high, etc. RS days in a bit here. So
yeah, and one of the things that they did differently is they doubled down on kind of social media marketing through TikTok, where they started a lot of challenges and campaigns. So they were basically creating, they were doing their advertising organically, and that brought a lot of sales to the platform. So that type of stuff, a new approach, again, we'll get to the N factor, that can be a driving force in a stock's move, and we can clearly see it in the accelerating earnings and sales. I mean, those are picture perfect numbers. They are accelerating pretty much every quarter, so that's awesome. All right.
We got the recent run in NVIDIA where we pulled back to the 100 level, came back in, reclaimed the 10 and the 40 week up the right side. And then this thing was up at one point, I think 8 weeks in a row, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row up the right side. So one of the things that William O'Neill used to look for was 8 weeks up in a row, I believe. I think we have that in the platform as well as a technical pattern that you could scan for. So that's a clear tell that as it comes up that right side, right, there's something, there's some sort of accumulation that's not allowing this stock to close down on the week even. And then when we see the 10-week rising up and the 40-week curling right back up, that was kind of the, right here, or even if you, got a hold of it after those 8 weeks up, right on this candle where it reported earnings, etc., there was consolidation and a break to the upside. So this one's gone from about 200 to about 400. That's a double. And this one, now it's fueled by the whole AI, theme, AI chips, etc. So a lot of these recent companies like Google, Adobe, NVIDIA, they're starting to incorporate AI into their platforms. in Photoshop and Google search, etc. NVIDIA with their chips to run all of that stuff. Even Amazon's building their own chips as well. So a lot of these names that were considered Microsoft shouldn't be left out. They're probably the top with their investment in OpenAI. So now they're being driven by something that's new. Now, how long that lasts, etc., is debatable. Is unpredictable. But at the moment, that's one of the top themes to watch in the market and how they kind of place themselves in this whole AI run and how effective or easy they make it for people to use. So
Yeah, and we'll see where this is in a year. Even if we think a stock is a market leader, if it breaks a 10-week and starts a downtrend, we'll revisit once it sets up again. We're not letting our opinions or fundamental stories or whatever direct our opinion. Everything has to be confirmed by price action. So this could need a longer base and let that 40-week moving average catch up to price, as we saw a few of the other leaders do in the past. But we'll keep an open mind, and we'll see what happens. Right now, it's still holding the red line, the 10-week here, and we'll have to see how this base plays out. But yeah, always keep an open mind, even if you think a stock is a true market leader.
Yes. So now we have, the importance of groups and themes. I think we spoke about this a little bit earlier, right? So added fuel for price. So how, if a stock is in a group that's working and there are multiple names in that group and that group as a whole is seeing some sort of earnings and sales growth, right? That's going to play, as well. So, the ETF world kind of comes into play. They come in and invest in thematic ETFs that kind of exist. They come in and buy that stock. You have investors buying that stock. You have a lot of forces joining in the same direction. So when a stock is in a group or theme that's working, some of the recent themes that we've seen are AI, crypto, cannabis, software, cybersecurity, and others over the years. Those top names in those top groups seem to double and triple a lot quicker in a shorter span of time when they're fueled by a group or theme. And a stat by William O'Neill, based on his studies, was that 37% of the stocks move is related to the industry group it's in. That's why people tend to also look at top stocks and top groups that you want to see. Also, it helps from a conviction standpoint, right? When you have a whole bunch of AI names, or you have a whole bunch of software names or cybersecurity names going up at once, it helps your conviction to position size in some of these leaders and have bigger and better positions, because there's an investment in that group or theme from a market perspective, be it retail traders, institutional traders, etc., driving that particular theme, so, or that story. So and the last one is lone warrior. So we do have some stories like Amgen and all of these back in the day that were kind of driven by the drug that they came out with, or ISRG for that matter, of what it did in that space. Those tend to work as well, but on a net basis, if you just have one stock in the whole industry group that is acting well and nothing else is acting well, the failure rate tends to be a lot higher on a net basis. So to increase our probabilities, it's always good to have or see stocks that are in grouped into themes that are really working in the markets week to week, month to month, quarter to quarter. So Richard, anything to add?
No, not much. I think we've touched on the importance of groups a bunch here. So let's move on. I think it's the N factor. So we mentioned this before, but this is a key thing that you should keep an eye on. What new products are driving the stock price higher? A new CEO can completely change things. That happened with AMD, right? She completely turned the company around and made it what it is today. A new advertising method, like we saw with ELF. Is this stock part of a new technology that will stand the test of time? AI could be that. We saw that with EVs, and throughout history, we've seen that. And then also new highs, just technical price action can drive you towards some of these names that maybe you haven't noticed until then. And then you can research the story and learn more. So I think Anything to add on the N factor? Anything you really pay attention to?
I mean, so recently, like the AMD story was a turnaround based on CEO, really, and then combined with products and technology. Um, I'm thinking of some, Tesla is kind of like no advertising type of move. So that was kind of very different, technology driven type of name. The new highs is one of the screens that you guys can run pretty much every day. Some traders that we know are very successful run that every single day. So just to see what themes are making new highs in the markets, etc., and they can keep on top of that very frequently and very easily, just running those new high screens. So I think with that we have a checklist, right, Richard? If you want to cover the checklist.
Yeah, this is just kind of reemphasizing things we've seen. You can look for relative strength score, whether it's 3 month, 12 month, 1 month greater than 90, strong quarterly earnings or sales growth. That might be a shift that, since William O'Neill was, trading in force, sales growth has mattered a little bit more just because there's more type of profit models that focus on sales growth over earnings recently in the software space. Relative strength during corrective markets, we really spent a lot of time focused on that in the previous webinar. Part of a new and developing theme, we've covered that, the N factor, and then the constructive signs of accumulation, price and volume signatures, a lot of weeks up in a row, huge volume to the upside, those key things. Anything to add for people to really keep in mind as they're looking for true market leaders, Rai?
I think you can also define your own checklist and based on what you see in the markets, right? These are many there are many different ways to kind of scan for all of this stuff, keep on top of all of this stuff, and some of these are some of the most common data points you could say, or ways to keep on top of stocks that could double and triple. And I think it's a good time to kind of get into examples and the platform itself.
Yeah.
So let's start with, we had a list here.
Yeah, you want
So
to do the preset screens?
yes, let's do the preset screens first. If we go to Deepvue, and we have the Deepvue universe. So this is one of the screens that we've created in the platform itself, and this is a creation of Richard. So Richard, if you want to just cover kind of what it looks for, right? And maybe
Yeah.
go briefly over the and or methodology, how it kind of puts a net over the market and it gives you a whole bunch of stocks that could meet a criteria.
Yeah, so sure. So from a high level, it's looking for stocks that are reasonably liquid with a good dollar volume, at least $20 million a share, at least over $10. It's looking for common stocks, ADRs as well. Then it's making sure that there's a decent amount of relative strength on different periods here, whether it's on a 12-month period of greater than 70, 3 month greater than I think that's 80, and then a 1 month period greater than 90, just to make sure that if the stock is really strong right now, maybe it wasn't so strong a few months ago, we're picking those up as well. The next group three, I saw somebody asking in the chat about industry group scans. Here we're looking for those leading stocks and leading groups, so that's what will be picked up in this group right here. And if a stock is extremely strong, it will pass through that layer anyway. Group four is, again, just making sure it's in a strong price trend. So we're combining here several different ways to look for strong stocks. And this one actually doesn't incorporate any kind of fundamental information, but the price strength kind of, if a stock is pretty strong price wise, there's going to be some type of fundamental movement as well. And I always go ahead and check out the stats table down here, take a look at the earnings and sales when I'm reviewing the stocks on this list. So that's a quick thing about the Deepvue universe. This is kind of my go-to screen. If I only had one, I think it would be this one. It usually catches about 300 to 400 names. And the leaders will be on this list. Every single leader that we've had in this cycle showed up on this list pretty early on. And it does a good job of catching rotation as well, as we've seen more oil and gas names acting well. Those have shown up. Cybersecurity started showing up on these, 2 weeks ago. So if you're not already using this as a part of your process, highly recommend it. It's a good, go-to list to run through and just tap through it. It takes about 20 minutes to go through the whole list. if you're going through pretty quickly. And it's a great sample of stocks to look through.
Yeah, so that's one of the presets. I mean, it combines a whole bunch of screens together. Another one that we've put together is also underneath this.
Yeah, and before we do that, Jake asked how I sort this list. I sort by the absolute strength score 1 month. Um, and I also sometimes, so this just looks for over the last month, what's been the strongest, right? So this is going to catch the momentum movers. And I also sort in some of my screens first by the industry group and then by the absolute strength 1 month. So that then I get to see kind of within the group what's the strongest within the area, and just as a whole, how is that group performing? So really great question, Jake. Sorry, go ahead, Rai. I don't know what.
No, I was just looking at a whole bunch of stuff.
Yeah.
So the other one that we have is the William O'Neill screen.
So
That
top
one,
traders, yeah.
it's under top traders, and let's take a look at William O'Neill. So this one has a whole bunch of different criteria. So it looks at, the EPS score, the relative strength on a 6-month basis, the AD ranks being A plus, and B, the earnings growth and the sales growth being above 20%, and then also the institutional ownership being a minimum of 5%, and the stock within 7% of the 52-week. I'm not too sure why we put 7.28. I doubt that's the actual criteria, so we could correct that. But that's one of the other presets that we have. Basically, it looks for strong, really strong stocks within X amount of 52%, 52-week highs, and combines the earnings and sales. So you look at something like BRZE is about to report earnings. That this red flag tells you that earnings are coming up September 7 after market close. So that's today. It actually reported. So a lot of, very easy way to look for potential stocks that are acting really, really well. And, a screen that if you go through it, you'll get a whole bunch of ideas from right away. So
Yeah, let me jump in. There's a question from NA. If we go for strong RS and industry group performance, are we not arriving late to the party, or will these screens pick up the stocks setting up in bases? These screens will set up, will catch the stocks setting up in the bases, because that absolute strength screen 1 month, that's looking at the performance of every stock in our universe and ranking them based on that past month's price performance. And almost always stocks have a strong 1 month, off the bottom, or, breaking the downtrend before they really get going and starting up bases. So yeah, really good question. And even after a stock is out of its first base and has strong 3-month RS, if the move's going to continue, there'll be spots to get in and tight areas. So that's a really good question. Yep. And Mike, hopefully that answers the question. Defining AS score. It's very helpful, and it just looks at the raw numbers. The RS score is weighted, so the most recent price action is weighted a little bit more. AS score is just simply price performance and rating that. So they're both very similar, but useful in different ways depending on what you'd like to do. All right.
Awesome. I think we could go into many of the data points that we have that kind of track this kind of stuff. So one of the first ones would be like price versus a moving average, right? That's very basic way to say, let's say right now the S&P is below its 50-day, right? What are stocks in the market that are above the 50-day? So you could do that, just price versus SMA. You pick 50, you say greater, and you add that to your criteria. So you could say, give me stocks that are always, that are above the 50-day at the moment, and you could create that screen. And that could also be relative to the market. So if the market's below its 200 and you want to see stocks above the 21-day, or if the market's below it's 21-day, you want to see stocks that are above the 10-day. So that's a very basic way relative to the market, which stocks are kind of outperforming. And you'll see if you just run a basic one right now and say, give me all stocks versus the 10-day in the scanner, you'll see a lot of names that will also pop up on relative strength screens, RS new high before price screens, etc. So that's a very basic way to kind of scan the markets for strength. Another one is the one that I like to run is the one that Ross is big on. It should be under technicals. It's the relative strength new highs. So relative strength new high on a 1, 3, 6, and 9, 6, 9, and 12, and then relative strength new high before price makes a new high. This one will give you a whole bunch of good names in the markets most of the time. So those are two that basically say that these names are not going down as the market is going down. That's another way of defining just these stocks are not being sold into as the market is pulling back. It's a very easy way to see and visualize and measure that. And you'll see a whole bunch of stocks that, you'll see consistently, once again, on this relative strength new high before price, we see BRZE. I'm not sure how it's performing after markets, but if there's a surprise on this name, it's likely has gapped up already. So let's see. So we got RS. We got basic price versus SMA. One of the biggest components in scanning in terms of just liquidity is dollar volume. So we have average dollar volume on a 50 and a 20-day basis. So that one gives you a measure of the liquidity of the stock itself. So if you want to see, only show me stocks that have traded a dollar volume of 10 million or more.
Gotta count your
This
zeros.
we gotta so 10 million or more, or you can make this 20 million or more, and add that.
It's 6 o'clock.
It's a good blanket to have because a lot of these stocks that double and triple tend to have a minimum requirements on volume and average dollar volume, both on a 20 or 50-day basis. So that's another data point to look at. If you want, if you don't want to be in a thin stock in a bad market, that's going to take a lot of money away from you very, very quickly, because when things get bad, the price action will be far more, the beta will be higher, and the way it moves to the downside, people, anybody in it is basically looking for liquidity to get out of that name, right? So they will consistently, sell those stocks to the downside and completely get rid of it. So that's why you want to, kind of blanket yourself, away from that volatility. And that's, average dollar volume is another way of doing that.
And there's a question from Roy. Could you open up the data columns real quick? Because this is for anybody new to Deepvue. All the results of screens. Open up the data columns.
Oh, this one?
No, just open it up. Make your chart smaller, just to show the columns. So for any screen in Deepvue, this is where the list of stocks is shown, and then you can add any data column you want here. Any data point in Deepvue you can find and add as a data column, and then you can just scroll down and see the results. So hopefully that answers that.
We have over, I don't know, we have over 300, 400, 500 now, and we're continuously adding more. So anything that you could kind of scan for in Deepvue is also available as just, kind of a plain old column as well. So
yeah, and a lot more fundamental data points are coming, right?
Yeah, in the short run. Yep.
Let's see, going through questions here. I see a lot of questions that are on around kind of if I had one screen or only 1 hour to screen, what would I use? For me, it would be the Deepvue universe, but also I've got a liquid leaders screen, which we could build really quick, Rai. That's a good one to show. So let's go ahead and build that. I've got the criteria here. So first, average dollar volume is greater than 100 million. So this is looking for extremely liquid stocks. That's why it's called liquid leaders. So
50 day?
20 day.
20 day.
Yep. So 100 million. Then the last price has to be greater than $20. And go ahead, just look for stocks too while types right there. Just common stocks, yeah. Yeah, just common stocks. Then we're going to use an OR filter, which I'll explain in just a second. So click that. And then look for AS score 1 month over 93 or AS score 3 month over 87.
We got these AS scores 3 months.
Yep, over 87. And one month over 93. So I'll walk through the screen and kind of what I'm looking for here. And this shows about looks like around 70 names. So yeah, this is what I call the liquid strength screen. And you could add an earnings growth requirement to this and get it even lower. So if you only have 1 hour, um, this is a perfect screen to run, especially if you're focused on more of the liquid leaders. AB&B acting well. Adobe's been stellar. Affirm
Mhm.
off the bottom is acting quite well. So a lot of these names, CrowdStrike, we're seeing the DDoG, we're seeing the software theme clear here. So these are stocks that are extremely liquid that institutions are focused on, and they're showing extremely good relative strength. And you can tweak this again. You can lower the relative strength requirements, add in fundamental criteria, all of that. But this is a great group of stocks to fish in, especially if you've got limited time. I know everybody's got their own requirements there. But let me walk through the and/or filters real quick because this is a nice clean example for it. So that top group, group one, because this is an and group, we see the plus sign right here. In order for a stock to pass through this layer, this group of the screen, this criteria has to be met, this criteria has to be met, and this criteria have to be met. All three of these need to be true for a stock to make it through group one and go from our overall list to potentially passing through this screen. Then when we get to group two, this is an or group, and we see or written over here, so that's how you can remember it. And in order to pass through this layer, only one of these criteria needs to be met, because either the AS score 3 month has to be greater than 87, or the AS score 1 month has to be greater than 93. And if either of those criteria are true, or even if we had one or two more criteria, only one out of any criteria in this group needs to be true for the stock to make it through this group and get into the results. I'm not going to write out results here in lines, but you get the point here. So this is an and group. Every criteria needs to be met to pass through. This is an or group. Only one out of whatever number of conditions is here has to be true. And what this allows you to do is get really creative with your screening. Combine screens that you used to have. You used to have to run 5 different screens. Now you can make that all in one. And you can add more than one or group, so you can get really creative with this. We saw the Deepvue Universe screen. It utilizes 3 different or groups. So definitely play around with this, and it's really powerful and allows you to really drill down into your screening. AS means absolute strength, so it's looking at the percentage gain over that time. All right, let's see here. There was a question about whether you can scan for VCPs, Rai. Do you want to touch on that and kind of what we've been developing?
Yeah, so this thing that you see at the bottom, the relative measured volatility, is one of the indicators that we've just put out. So this gives you the ability to look at stocks. So you could define your look back period, and you could say, it could be 25, for example. And there's some really good examples of this. So the idea here is I'm going to go to SQ and kind of go back in time on
Yeah, and
SQ, kind of
as
show.
Rise going back, you'll be able to screen for this criteria. So you'll be able to screen for tight areas on the chart and come up with a list of stocks that have very tight price action. On the RMV, close to 100 means price expansion, and close to 0 means that the stock price action on a relative basis is getting very, very tight. So here we're on a weekly. This is a weekly RMV looking back 25 bars, and you can see how it gets to 0 when tight, when the price action gets extremely, extremely tight.
Yeah,
And
since we're on the weekly, I'm going to reduce this a little bit. Sorry,
yeah, you're increasing it.
20.
Yep.
Yeah, so the idea of this relative measured volatility, what we're going to give you guys the capability to do here is basically scan for tight stocks on at any point in time, and it's comparing the stock's volatility at this point relative to itself. So is it trading tight versus how it's been trading historically? And every time the RMV or the relative measured volatility score falls into this 10-15 zone, and Richard can explain quite well what that means. It means that relative to how it was trading before on the look back period, the stock is starting to trade tight. And that alone, that this data point alone, right now we have it as an indicator. By the end of next week, we will have it as a data point. That alone will allow you to make a scan on the markets and just say, show me stocks that are getting tight, right? So any stock, if you want to scan for something like this on the weekly, or if we go to the daily, if you want to scan for just areas of tightness or relative tightness on a stock. So one of the better ones recently was, let's say, Uber. You could see that, right about here, it was getting tight, and you will literally pick up stocks that are getting super tight on the dailies as well. So we could go over, there's a whole bunch of examples. You can see that, CELH, relative tightness right around here, relative tightness right around here. So it will be one data point allowing you to scan for a whole bunch of, just consolidation, you could call it, or what we call tightness in the markets. Same thing right around here. When it traded super tight, sideways action, the RMV was in that 10 to 15 zone. Again, showing you, that this stock is trading tight relative to itself. And that's what I think is, a huge key to finding some of these stocks that build these consolidation points or dry up while the price action gets super tight.
Yeah,
Richard,
bring
to
up
add there, because you're kind of the architect of all of
yeah,
this.
bring up SMCI and scroll back a few months because I think it's a good example. So tight areas, it's great for entries. Yeah, that's about good. And zoom in maybe just a touch. So tight areas are super helpful because not only, yeah, this is good. Not only are they, good for potential entries, but also they're signs of accumulation. They're signs of institutional accumulation behind the scenes that can drive trends. So SMCI, you can see during the base before it broke out. I'll draw the kind of the base pivot here. We see tight price action, especially right here. The indicator goes to zero. And then right before the earnings gap, we get two very tight bars here. Again, this indicator RMV goes to zero. Then we break out, and then look how tight the price action gets here. And then this gets below 5 and just goes sideways for that area. And you'll be able to screen for stocks that look just like this, whether this is forming during a handle, after a breakout, in the base. It will bring up that chart, so you'll be able to save a lot of time, because before you've had to do this manually with your eye. Now you'll literally be able to scan for tight areas. Even this flag here, you can see it gets below that 5 level. Again, we push higher, we tighten up a little bit, and you can see it in this indicator. There's nothing really out there like this. And if you're a newer trader and trying to train your eye to find these tight areas, it's super helpful. But even if you're a more experienced trader, it can confirm your analysis and also just kind of allow you to screen for stuff very quickly. I know a big part of my process is looking for those tight areas in the charts, and this will save me a lot of time during my weekend routine.
Yeah. So, and the idea is, once we add this to the screener, you can just say, show me stocks where price is above the 10-day, right? Volume is trading below average or a reverse pocket pivot, and the RMV score is less than 15. That in and of itself will give you all that you kind of need. Or you could say, the stock's 50-day can be above its 65, and the stock's 21-day can be greater than its 50. I want uptrending stocks that are getting tight, right? So it will help you guys a lot in terms of just that. We will create a preset out of it just to showcase it a little bit. But I'm sure people will get very creative. Maybe some people will say, show me volatile stocks that are extended, right? And use that to their advantage to maybe in a bad market short those names, etc. But this is just a tool to say, this right here, like if you could just see and scan for this, and you say above the 10-day, show me stocks that are kind of RMV less than 15. This will show up on your screens. So that's kind of the idea behind this score.
Yeah, just to bring up one more example before we move on, could you do CEIX? This has been one that's been nice and tight recently, and like going through manually through the Deepvue universe, I found this stock, but there's been several periods, after this move up, we saw tight action for 3 days. This goes to zero. Then it gets super tight in this area. RMV goes to zero, and again tight right before this nice move. where it goes to zero, and I actually traded this. So this is just a really helpful way, and you haven't been able to screen for stuff like this before. So I think it's something that makes Deepvue really unique and something I'm really excited to see a lot of traders using. So I think that's enough on the RMV, but again, we'll be bringing it in as a data point very soon, and I'm looking forward to using this. And then once again, look how tight it got in this area. Boom, and RMV goes to zero. So when this spikes to zero, that's when you should really be paying attention, because here there's a move to the downside, but either way it can move, right? So it's super handy.
Yeah, and I think this is important. This is not, we're not trying to showcase this is like some holy grail. Like
Yeah.
market's going to matter. It's going to make your scanning easier. That's what we're trying to, say or communicate to you guys. Is it's going to make your scanning. If you could scan for this and you have 8 of them, right? And you identify a theme within those 8 and the market gets going, there's a good chance, you'll learn and incorporate this as part of your process and scanning that a few of them are going to work in a good market. And there are going to be instances that, from tight areas, you get, a volatility basically. So, right, that's what we're kind of scanning for as well. So you combine that with your, what you've learned in terms of volume, if you track that, what you've learned in terms of EPS and sales, et cetera. And it's going to be a combination, but it will assist you in finding these super quickly week to week.
Yep. Perfect. So let's see. We can go over any other questions here. All right. Let's see. Eric, I think we already went over the liquid leaders screen. Go ahead and look back at the recording if you missed that. But we went over each of the criteria and kind of built that live here. Let's see here. I'm not seeing, let me scroll to the top. I'm not seeing too many questions. Okay, so this is actually going from Joseph, and then we'll kind of open it up to more general Q&A and some ideas, because we want to get ideas, right? So we want to make Deepvue the best platform out there, so we'd love to hear your thoughts. How can we help you screen for leaders? If there's a screen that you use that you'd like to see as a preset or something that you find really valuable, we'll incorporate that. But Joseph asks, hi, Rai, could you go over the differences between a true market leader versus a performance booster stock? I think it will be good for the audience to hear. So yeah, maybe define real quick what a performance booster is and maybe how you treat them differently, even though they might both be stocks that you might be focused on.
Yeah, so there's a difference in 2 ways. One way is liquidity, a measure of liquidity. Something like an NVIDIA, Uber, I treat very differently, because I feel like, if I catch a move like NVIDIA 8 weeks up in a row coming up the right side from 120 to where it's at now, right around it could double, right? And it's liquid. It has high institutional ownership. It has good estimates, and it's a well-known company that's not going to cater overnight per se. So if I do the same thing on this company, this is IonQ. It also has an AI theme. It's part of that theme, right? But the price performance on this stock is going to be much higher, because the average daily range on this name is 10.4%. So when I'm deploying capital and I'm trying to deploy 10, 15 million, let's say, in capital, I can't do that on this name and feel comfortable at the same time if that, 10, 15 million, let's say, is 30% of my portfolio or 40% of my portfolio, whatever the case might be, right? So this name in and of itself, yes, it's part of that theme. It's part of the AI theme. Yes, it might outperform NVIDIA at some point in time, or maybe already is from a price performance perspective. But I can't pile in and go to sleep at night with a large chunk of my portfolio in this name when this thing makes 5 million a quarter, right? So that's what a performance booster is. A performance booster is a company that's part of that same theme, is part of the AI theme. Let's say our current theme is AI. It's going to double in a short span of time, but you want to just sell that into strength and go focus back on your cores, which are your NVIDIAs, Ubers, ELF type of names, right? CELH, app, VRT, those type of names have a better track record as to what they're doing. VRT makes 1.73 billion in sales. This thing's not going to cater overnight, you know. Whereas IonQ, I can wake up tomorrow morning and something's happened, and what was projected to be 4 or 5 million in sales is now not there anymore. That's a situation you don't want to be in. You That's why you have your core positions you focus on, and you surround them with these smaller names with higher average daily ranges that will run as part of the theme. You scale out of them and you go back to your cores. They allow you to hold your cores as they pull back in to the 21-day or the 50-day, as they pull back in to after running from here. They've run a bit, they're resting, and now they're trying to consolidate and form those new areas once again. So that's kind of the difference. I hope I covered that well, and it's a good contrast when you compare an NVIDIA to IonQ, both in kind of the AI theme, but one's far superior in terms of earnings, sales, liquidity, institutional ownership, etc. You name it, it's better.
Yeah, and in the chat, somebody mentioned CVNA is kind of a good example of a performance enhancer. There's not even really a theme with this one, but this is more of a swing type name. It's very volatile, but can lead to really nice moves for a few days, like we saw the previous week after it compressed against the 50-day moving average. So,
And this is what I like. Like, if this gets tight right here, you're scanning for RMV less than 15. That's super exciting. Like, you could pick it up as it is tightening, right? This day, the RMV less than 15. So very excited about how that's going to be part of the platform. So,
yep, for sure. Let's see here. All right, at this point, I think we'll kind of open it up to ideas, thoughts on Deepvue platform, questions, anything really on finding true market leaders. And you can leave it either, just kind of leave it in the Q&A section if you can. That way we can keep it organized. So let's see. And Rai, if you see a question, feel free to answer it.
yeah, if so there's a question on, why aren't you guys doing trials? I don't know if you answered that, but I can answer that.
Yeah,
So we do have a affordable monthly plan. It's $49. You can come in, try the platform, see it. For us, we don't, we're pretty, we're focused on, people that are coming in, they enjoy the platform, and it's, we put together a very cheap monthly plan. So if we look at, the amount of earning sales, etc., data points, the way we're building, the way we're, our trajectory versus some of the competitors out there, we're priced much lower. So for us, we're comparing, a 149 product to a 49 product. We feel will be superior by the end of the year in every aspect, and then some, especially if we roll out, when we're rolling out the dashboard, which is completely customizable view. We're rolling out iOS, Android apps, fundamental data, technical data. So in every aspect, I think will be a well-rounded product. And so you can come give it a try, see if you have questions for a month. And a lot of folks have done that and stuck around. So why do you make these webinars free? So why do we make if you just recently started following us, we've been doing free stuff for years. If you go check out Trader Lion, the YouTube channel, you'll see over 300 videos. They're absolutely free. We've had interviews with hedge fund managers, portfolio managers, etc. And we're kind of using all of that knowledge, working with them as well to bring it to this platform as well. So this is not just our brains into this. There's a lot of, relationships that we've built, and we're kind of bringing all of that. Why is it free? I wouldn't feel comfortable having this as a paid one. I don't know if that answers the question.
Yeah. Also, we genuinely like helping people learn and speeding up people's learning curves. I got the pleasure of taking a class at the University of Maryland that probably took years off my trading learning curve. And if I can do that for one other trader, that's valuable to me. So yeah, that's why we do free webinars, free YouTube videos, all of that. Increase the trading knowledge and pay it forward a little bit. And like Rai said, we're getting to pick your guys' brains to how to make this platform better, and that itself is valuable to us. So
Yeah, I
yeah.
mean that's a huge part. We want to, hear what you guys think we could do, and we want to listen. And these webinars are kind of a gateway to also gather ideas on what we feel, what we can see from you guys and the ideas that you give us and incorporate that. So the way we're building, the way we're headed, the way we want to listen to you guys, make this your platform, make sure that all the features that you want eventually make it into this platform. That's kind of the way we're building actively, we're building publicly, we're front facing. We want to talk to you guys every single day. So yeah, so that makes us a little bit different than maybe just email us type of company. So
Yep. There's an idea. There's some questions about pattern recognition. I know we've been working on that problem and are working on some indicators to bring that to life. So do you want to touch on that?
yeah, so pattern rec will come in a few different ways. So one will be like an indicator that analyzes a base for you. That's something that we're kind of currently planning, where it will kind of analyze a weekly base and give you kind of a score based on that. So there could be that kind of pattern rec. I know, Richard, you've worked extensively on looking at giving people filters for base consolidations, right? And how you can define those. But I think in a way, RMD kind of takes care of that. I think what Maureen, is trying to say is more so like the cup and handle. I just click yes, and I see a whole bunch of cup and handles. That I think, in terms of priority, will be a little bit later. I would say later in Q4. Right now, our focus is very, we want to give a flexible dashboard to people where you could pull in a couple of screeners, pull in a couple of watch lists, pull in a couple of data panels, and customize it the way you want. Maybe you just want a giant chart. You'll be able to save that as a dashboard and just scroll through a whole bunch of charts. So, and then iOS and Android apps. So that's in the pipeline. I'm not saying, it's never going to happen, but we're doing it a little bit differently, where we're focusing on, some of the pet peeves that, or some features that we feel are unique to our platform and will allow you to make your routines faster. And that's kind of what, this idea stemmed from, is how can we quickly give some people a way to scan for tightness. So pattern recognition will be later in Q4. So
Yep. And MKS, do you have a glossary somewhere with descriptions of indicators and data panel items? We do. It's called the Deepvue knowledge base. I'll paste that link in the chat just a second. I think we should make that maybe a little bit more prominent so people can find that easily, because it's a very good resource. Let's see. There's a question from Veer. Will we offer desktop app as well down the line?
So our focus right now into the end of the year, I think maybe earlier than December, we'll have a iOS Android app. Once we have the basics of that, we just want to make sure that people that subscribe to the platform this year can be looking at charts on the go, looking at screens on the go, looking at watch lists on the go. Once we accomplish that, iPad compatibility is actually going to be finished next week, so that's exciting. The native desktop application will be likely, sometime next year. Our focus right now is to get the basics of, in terms of the mobile applications done and out. We have this web app. You could always make it a shortcut or install it as an app on the Edge or Chrome platforms. That's doable. But a native desktop app, very similar to, let's say, TradingView or TC2000, would be sometime next year.
Yep. And Ethan asks, does Deepvue have live chart movement? Yes, everything. We have real-time price action, and we also have a mini chart view that's coming relatively soon. Rai, if you want to kind of describe that.
Mini chart view will be rolled out on Tuesday morning. It will basically be, it will be an option up top here, and you will have 3 charts in a row. And you could infinity scroll through your screens looking at charts, basically 3 in a row instead of having just one chart. So that's coming out. Pre-post market support is also coming out Thursday morning next week. And there's one more thing that we're rolling out. Breath indicators also coming out on Tuesday morning. So next week. So there's a lot happening. There's a lot, we're adding to the platform. There's all of these ideas stem from users on what we should prioritize and do first. So um,
Lots of excitement for pre-post market. Yep, same here. I completely understand. I know, Joseph, you've been asking that for a while, so for sure, for sure. Let's see here.
a good question for global equities and which countries we will be launching with. So that's a debate that we're having. We will likely target a couple of global markets, and there's a possibility we add support to all global markets at once as well. But all of that is kind of in the works over the next few weeks and months. But our first one that we want to target is there's a lot of interest from the Indian market, the Australian market, and the Canadian market. Those three will likely be the first ones. And then if we get away, if we get away with some of the talks that we're having, then there's a possibility we could include all world exchanges at once, pretty much at one go. So there's a possibility of that, but that's still kind of being talked about. Yeah, I forgot European. European's at the top of the list. Those are top four. So European markets, Australian, Canadian, and Indian markets. So dark mode's already there. Any other questions, Richard? Anything else?
Nothing crazy here. I think we've gone over by 30 minutes, so I think we can start to wrap up. But to everybody who attended, thank you so much for tuning in. We really appreciate it. Everybody watching the recording, thanks for watching until the end. If you're watching this on YouTube, leave a like down below. And definitely go ahead and check out Deepvue if you haven't already. Go to deepvue.com. I'll post the link one more time in the chat here for everybody watching live, and the link will also be down below in the description as well as popping up right here. So thank you guys all for tuning in. Let us know any feedback you have down below. Thank you guys all for your ideas. We really appreciate it. And Rai, anything you want to leave everybody with?
No, I think we want to make Deepvue a true market leader as well. So any ideas, questions, comments, etc., what we could incorporate, what you like, dislike, etc. We know we're completely open to that feedback, and we will improve this and make this the best possible platform to subscribe to. So
yeah, perfect. With that, thank you guys all again for attending, and we'll see you guys in the next one. Cheers.